Coming up in today's episode, one of the biggest companies in the world has entered the AI chip market, and some of my favorite companies hiked their dividend recently, and one company actually just cut their dividend for the second time this year. It's also earnings season yet again, so we'll take a look at a dramatic move that happened to one company after their earnings. All this and much more in today's episode of Dividend News. First up, let's talk about some dividend increases, which are one of my favorite pieces of news to hear as a dividend investor. About a month ago, the aerospace giant Lockheed Martin declared a dividend raise of 5% to $3.15 per share per quarter. This raise was below their 5-year average growth rate of around 8.5% for the dividend, but there's nothing wrong with a 5% raise given the economic uncertainty that lots of companies are facing these days. Another favorite company among dividend investors is McDonald's, which announced a dividend raise of almost 10% to $1.67 per share per quarter. And this one was super exciting because that raise was above their 5-year average dividend growth rate of 8.5%. This next company is certainly a grower, not a shower right now when it comes to their dividend, and that is Visa. Right now, they have a 5-year average dividend growth rate of 16% and a 10-year average dividend growth rate of 18%, but their dividend yield is still under 1%. Yet again, they didn't disappoint this year and announced a 15.5% dividend raise at the end of October. Another company that announced a double-digit dividend raise was the insurance company Aflac. On November 1st, they actually declared their December and March dividends, and the March dividend will be 50 cents per share per quarter, which is an increase of 19%. Aflac does have 41 consecutive years of dividend growth and an average dividend growth rate over the past 5 years of about 10%, but their dividend growth is a little lumpy. Some years they only grow the dividend by a few percent, like 3 to 5%, but other years they grow the dividend massive amounts, close to 20%. But if they can maintain that 10% average dividend growth rate over time, I'll certainly be happy, and I'm not going to complain if that comes in a rather lumpy fashion. And some other companies that hiked their dividend recently and deserve an honorable mention are Nike, Snap-on, Amcor, and ConocoPhillips. This next story is all about AI. One of my favorite dividend stocks, which is Microsoft, just announced a new chip called Maya 100 that is specifically designed for artificial intelligence use cases. And this chip will be used exclusively in Microsoft's data centers for its Bing chatbot, GitHub Copilot, and GPT 3.5 applications. They've also designed custom liquid cooling hardware that can be installed directly next to these Maya server racks. These new products are going to position Microsoft as a more competitive player in the cloud computing space as AI applications become more prominent over time. Unfortunately, there was no information in this story on when the Maya chips would be available in Microsoft data centers, but hopefully it will be sometime in the next year or two. They did also announce an ARM chip called Cobalt 100 that is for more general computation purposes, and some preliminary testing they've done show that the Cobalt chips perform 40% better than existing ARM chips that Microsoft currently uses, and these chips will be available commercially in their data centers in 2024, so that's pretty exciting news. Next up, a company that has been struggling recently is Target, and they just announced their third quarter earnings, which were actually fairly positive, all things considered. Revenue for the quarter was down 4.3% year over year to $25 billion, but it did beat analyst estimates by just a little bit. And then gross margin was up to 27.4% versus 24.7% a year ago. And then earnings per share were $2.10, an increase of 36% year over year. This caused the stock to soar over 17% on Wednesday after the earnings report, which was pretty cool to see. But management did indicate some headwinds. They noted a few items such as inflation, which they say has been sticky, and that goes along with higher interest rates, and then also an increase in credit card balances across the nation pretty much. And then also they see some pressure from the restarting up of student loan repayments that have been affecting people as well. But the CEO did put a positive spin on the situation by using the word resilient to describe shoppers. So we'll have to see how resilient they are as we move into the holiday season and see if Target can capitalize on some of that and continue posting good results in the fourth quarter. I think right now Target is doing a better job of managing inventory, and it looks like the results right now are not as bad as expected, but like I said, we'll have to see what happens in the next few quarters. Another company that reported earnings recently is the conglomerate Berkshire Hathaway. Because of accounting rules, they do have to record all of their unrealized investment gains or losses on their income statement. So in their filings, they do show a net loss of $12.8 billion for the quarter, but that's pretty much not in line with the economic reality of their underlying businesses. So investors shouldn't pay attention to that number at all. What we should look at is the operating earnings of those businesses. And operating earnings for the quarter were $12.6 billion compared to $8.8 billion in the third quarter of 2022, which is a fantastic result. A notable milestone as well is that Berkshire's total assets are now above $1 trillion, which they had not reached at the beginning of 2023. So realistically, that doesn't really mean anything except that their assets are growing, but it's just a cool milestone to see that they've hit. Unfortunately, not all companies have good news to share. The apparel company VF Corp announced another dividend cut recently, which was the second cut of 2023. So in February, they cut the dividend about 41%, and then recently at the end of October, they announced an additional 70% cut to that dividend. So that's a total of about an 82% cut since the beginning of 2023, which is really not a good sign for the future of the business. But to end on a positive note, I did want to mention some companies that should be announcing dividend increases in the next few months. A few notable ones, in my opinion, are Coca-Cola, Pfizer, Travelers, Air Products and Chemicals, and Merck. And the final piece of news I have for this episode of Dividend News is that you should scroll down and click the link in the description to join my free Discord server. There's a number of active members on the server that chat regularly about their investing ideas, and it's a great way to learn more about investing from some very experienced folks. As always, I appreciate you all sticking around to the end of the video. That really does mean a lot, and I'll see you all in the next one.